The investment mindset nobody teaches. Have you ever noticed that two people can invest in the exact same stock at the exact same time, and years later, one has built wealth while the other has walked away disappointed? Here's the surprising part. It usually isn't because one was smarter. It's because one had a mindset the other never learned. Today, I want to share something that schools rarely teach, financial headlines often ignore, and yet it may be the single biggest difference between people who steadily build wealth and those who constantly chase it. Most people think investing is about finding the next big opportunity. In reality, successful investing is more about managing yourself than managing your portfolio. Think about it. When prices rise quickly, your brain whispers, "Everyone else is getting rich, don't miss out." That's FOMO talking. When markets fall, the same brain suddenly screams, "Sell before it gets worse." That's loss aversion. Our minds are wired to avoid pain more than they seek long-term rewards. This is why investing is less a math problem and more a psychology problem. Imagine planting a mango tree. You wouldn't dig it up every week to check whether the roots are growing, yet many people treat investments exactly that way. They check prices every hour, react to every headline, and mistake movement for progress. Real wealth grows quietly, often when nothing exciting seems to be happening. One lesson that changed my perspective is this. Wealthy investors don't obsess over predicting the future. They build systems that work regardless of what tomorrow brings. Instead of asking, "What's the hottest stock?" they ask, "Can I consistently invest every month? Can I stay calm when everyone else is panicking? Can I think in decades instead of days?" That's a completely different game. Behavioral finance tells us that our biggest enemy isn't inflation or even market volatility. It's our own emotions. Confirmation bias makes us search only for opinions that agree with us. Herd mentality convinces us that if everyone is buying, it must be safe. But history repeatedly shows that the crowd often arrives just before excitement peaks. Here's something practical you can do today. Create an investment checklist before you buy anything. Write down why you're investing, what could go wrong, and under what conditions you would sell. Better yet, automate your investments so your future isn't determined by your mood on any given Tuesday. And remember this, consistency beats intensity. You don't need to make one brilliant investment. You need to make many sensible decisions over a long period of time. Compound growth rewards patience far more than excitement. So maybe the investment mindset nobody teaches is this. Wealth isn't built by chasing the extraordinary. It's built by repeatedly doing the ordinary with extraordinary discipline. If this conversation gave you a new perspective, I'd love to hear your thoughts. What's one investment lesson you wish someone had taught you earlier? Leave it in the comments, and if you enjoyed this episode, subscribe for more insights into the psychology of investing. Until next time, keep investing not just in your portfolio, but in the way you think.